Good morning. Welcome back to Breakfast Television. We just touched on it, the historically high Ontario deficit. Mike Eppel from 680 News joins us now. Good morning, Mike. What do these big numbers mean for us?
Well, it's the Ontario deficit projection at $38 billion now, up another $18 billion from where it was just a few months ago, shows the depths of the pandemic economic shutdown. And the finance minister saying, look, we're in a recession. There's no way to sugarcoat it. But, Ontario is a microcosm of what we're seeing globally, whether it's at the federal level and $300 billion plus in deficit spending there. In the U.S., they've so far announced $4 trillion
with a T
in economic stimulus and spending and printing of money. And you look around the world, and every government's in the same scenario. The only silver lining, if there is one at all, is the fact that governments right now can borrow money at unbelievably low interest rates. It's actually the debt servicing costs are remarkably lower than where they were a year ago because interest rates on global bond markets have come down dramatically. So, if you're going to borrow, now would be the time to do so.
And speaking of those interest rates, too, you've got an update to something that you teased earlier in the week.
Yeah, well, the mortgage rate stress test benchmark that the Bank of Canada puts into place for the housing market did come down, effective yesterday, down to 4.79%. So that might free up a little bit of cash for first-time home buyers to come into the market. Of course, home prices have gone up dramatically, so the balance there is still in place. There was a lot of talk, actually, about revisiting this whole stress test scenario that the government put into place a few years back to, again, make it a little bit easier for first-time buyers specifically to come into the market. Does it change the dynamic? Maybe, maybe not. In fact, earlier this week, the head of the Canada Mortgage and Housing Corporation warned some of the lenders in the market to be careful because we've got so many consumers with rising debt levels again, and that's a worry. And getting back to government finances, it's the scenario where, okay, what were you doing when the times were good? Were you in a deficit then already? There was criticism, remember, before the pandemic struck, that governments were spending too much money and their books weren't balanced in the good times.
Right.
And that goes for family finances too. It's building up that rainy day fund. There's a lot of lessons to be learned out of this. Whether we will or not remains to be seen.
There's a strange question out of California. Are drivers that work for Uber and Lyft, are they employees?
Right now, they're classified as independent contractors. The state of California wants to change that to allow for Uber and Lyft drivers to become employees for benefits purposes. The problem is a couple of things. First of all, some gig economy workers are working for both Uber and Lyft. So they might have to choose one or the other. They're using it as, a side hustle, so to speak. They don't necessarily want to be employees. And Uber and Lyft, they're saying their costs are going to go up exponentially. So they might just pull the chute on California, which would be one of their biggest markets. So there's a lot of implications here from a business and political standpoint going on that could be seen as a test case for these ride-hailing companies, which, again, have seen their numbers drop dramatically. Lyft reported a $500 million loss, and their latest quarter saw a drop-off of 67% in ride-hailing activities, although they have been up a little bit most recently. But the changing dynamics, I mean, that industry, is it a tech company? Is it just a glorified taxi service? There's all that they've been kind of struggling with, certainly at a government regulation standpoint.
This time yesterday, we were talking about Tesla, and they've made a lot of money since then.
The stock yesterday went up 13%, and keep in mind, it's already up, it's about 300% from where it started the year. And it jumped yesterday because they announced that plan for a 5-for-1 stock split. Does that necessarily change the dynamic for the company? No, not from an earnings or sales standpoint, but from an investor standpoint, you're thinking, better get in now because once it drops or it comes into this new price point scenario, then investors will even want to buy even more of it. Nothing fundamental, but just the momentum to some extent that Tesla has seen this year.
Thanks so much for that, Mike.
Oh, yeah, and Elon Musk got a lot richer in the process, too.
Oh, big surprise there. Thanks so much for that, Mike. Nice talking to you this morning.
Thank you.